Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Monday, August 4th, 2014. We're going to take a look at the market, the action today. We've just got one day, and then we're going to take a look at a couple new trade ideas, and that'll be it for this evening. Okay, so the Dow was down or up almost 76 points today. So we got a little bit of a bounce, and it could be nothing more than a little pause just by the way it looks. It's hard to tell, especially when you're at an extreme. You're not getting any divergences. You got some extreme readings, but you're down here a little bit in the oversold yesterday, on Thursday, Friday. But we're not getting any divergence yet. Don't have to absolutely have a divergence. I could see us pulling back up to this trend line. Now, this trend line that we broke here on Thursday, which is why I think it's pretty significant. It goes all the way back to late 2011. So it's like an almost 3-year trend line that's being broken. And you'll see that on a couple. I see it on the New York stock, the New York Composite also. So we're in here. Where do we get support? I mean, there's potential not far below. I have a feeling if this keeps going, it's going to come down into this 233-day moving average area. You notice how that's where we touched and stopped back at the end of January, early February. That wouldn't surprise me. We may even go a little beyond it, get support where support came in here. We're just going to have to watch and see. I mean, it's a pretty hard little break that we got over the last week. Take a look at the S&P 500. Similar type scenario. Not as strong a break of that longer term moving average. We definitely got one of the shorter term in here. The divergences were definitely signaling, but then we got this pretty strong reading in terms of an extreme move here. But you notice how when you got that first extreme move here back in January, you then got a little pullback, and that was this like sideways pause of about, 4 days, and then one more leg down. So we've had, if you're doing the same thing, we've had 2 of those 4 days. Not saying it's going to do it exactly the same way, but we are getting a little bit of a pause. Okay, the next one is the NASDAQ. We'll take a look at. Again, we're not oversold on the NASDAQ by any means, and we didn't get nearly the type of break that we're showing on the broader market on the New York and the S&P 500. So you've got this trend line down in here. This hasn't changed much, just a little bit of a bounce back. The New York Composite, back similar to the Dow. And this is interesting that the New York Composite hasn't broken this longer term trend line. And actually this one, okay, this dark one, this black one right here, if that's color is black, I'm partially colorblind, that goes back to 2009. And then the red one goes from 2011 low. Okay, so the interesting thing on the New York Composite is we do have, if you count this point here, 1, 2, 3, 4 touch points, and now we're having a 5th very close to it. Okay, and the more touch points you have on a trend line, naturally the stronger that trend line is, and the more significant that trend line is. One like this with 4 touch points versus one that's got just 2 touch points, this is going to be the more significant trend line. So we're right at this trend line, and that's going to be interesting. Do we hold or do we break and break down further? The Russell 2000 got a little bit of a bounce here too. All the markets. This almost looks like it's divergence setting in, but this was slightly lower on the RSI than this, so it's not a true divergence, and there's no divergence here on the DI minus. So again, basically a pause day today. Short-term trading index. The 10 is starting to drop a little bit. We had a pretty bullish type reading today, naturally, because of the market. 0.63 down here is where it closed. And we haven't had too many readings below that. I think there was one right here at 0.57. But now we're starting to get this 10 down. The 10-day moving average is at 0.918. So pretty close to breaking below that 0.9 kind of extreme reading. Volatility index pulled back. Okay, so we could be setting up for a divergence if we pull back another day or pause or whatever, and then do another down move and don't get a higher high here. We could get a setup for a divergence like this and like this. So that's what we're going to keep our eyes open for on that. The high-low basically bounced back a little bit, you know, with this move that we got. So nothing new to talk about right there. Okay, so that's pretty much it. We've had one day on the market today. Now, you know, a lot of the action, you got to look at the stocks. And, you know, I kind of glanced through all of the stocks I'm following today. And two of them jumped out at me. I think I'm going to look at trying to get back in on CTRP in the morning to get back in long calls. And I don't know, the stock's just acting like it wants to still go higher, you know, and I was bullish about the overall scenario and where it's going. So I'm gonna try to play it. I mean, we'll just see what happens. And the other one, and again, the details will be on the Trade Ideas webpage. The other one is KNDI Technologies. Now, I've started to follow KNDI, even though the price is down below 20. It's pretty actively traded stock. And now I think we're getting where KNDI got to close back above the 10 here. The 10's right at the 21, above the 55, above the 233-day moving average. So the move looks like it's wanting to move higher. This could turn out to be a large cup and handle if we get this move up into here and break this trend line. But no matter what you want to call this, you've got this significant trend line here that if it breaks, it's going to move. And so right now I'm thinking that we're getting an indication of it's time to get back in. So I'll have the entry and what I'm looking at on the Trade Ideas page later on tonight. So that's the other one I'm looking at. I think that's it for tonight. We're still in Green Mountain Coffee Roasters, which dropped down today, and of course we're still in US Steel for half the position. So I will be tightening up or changing. I'm going to modify the trailing stop on Green Mountain Coffee Roasters anyway. Let me take a look at that real quick. Okay, so Green Mountain Coffee Roasters today closed down almost 1 point, and it swung all the way up here, and it doesn't look like much, but it was a pretty good swing. I mean, given that it closed to 119.76, got up to a high of 121.45, and it's been doing some of this. Okay, high intraday swings here, 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 up top in here, and then closing back down. Okay, and that's why I've had my stop the way I've had my stop set. And so now I'm thinking I'm going to modify this a little bit. We'll see. I'd like to be able to stay in. I think it's broken this trend line right here. Okay, and these 2 points, and this could be, you know, starting finally the rollover. Now I think earnings are coming out on Wednesday. We'll see what kind of action we get tomorrow. All right, that's it for tonight. This has been Joe for Beyond the Chart. If you felt the video was helpful, please share it on social media. And if you're not a subscriber, please subscribe. And all you have to do is click that little red bar or red box on the screen, and first name and email, and you'll be good to go. All right, we'll see you on the next video. Have a great Tuesday, everyone. Wednesday, actually. I'll be back Wednesday night.